I'm Alan Kenny, Managing Editor with REIT.com, and I'm in New York at the New York Hilton for REIT Week 2012, NAREIT's Investor Forum. Joining me is Keith Locker, President and CEO of Inlet Capital. Keith, for a long time we've heard about this wave of distressed debt that's supposedly going to be coming to the market, creating a lot of buying opportunities. Hasn't materialized, I don't think, to the level of expectations. Do you think it ever will?
We've been pretty active chasing the mirage of distress. And I say it's a mirage because you can see it. You can look at a building, you can understand its capital structure and know it's over-levered and underwater. But there have been such large pools of capital, both in the public and private markets, that are active in the deal market, especially in the coastal CBD cities and among core properties, that when a recapitalization comes up, these large pools of capital have been very efficient and values have been relatively fair. It's really hard, unlike the early 90s, to buy things at really deep discounts because of the large pools of capital, the transparency in the market, and the efficiency that the banks have taken in terms of holding assets, extending loans, and not marking and selling.
And Keith, your company, Inlet Capital, has its hand in just about every part of the commercial real estate capital stack. Where have you seen the most activity so far this year?
2012 has been a pretty active year for us. We see opportunity in both the debt markets in terms of recapitalizations and in the equity markets in both securities as well as assets. One of the areas of opportunity are divestitures and spin-offs out of the REITs of non-core assets. As REITs have become more quality focused and lower leverage focused, they've been selling some of their higher levered assets or assets that don't fit with their long-term strategy. And we see the spin-off and divestiture out of the REITs as being an attractive opportunity.
And Keith, 5 or 6 years ago, one of the big stories was public REITs going private. We've seen a lot of activity in the equity markets in the past few years, but none of these companies that had gone private coming back public. Are we going to see that anytime soon?
The REIT privatization wave of 06 and 07 was really predicated on the availability of mortgage financing and the high levels of debt that were available to take these companies private in classic LBO format. Unfortunately, the market has corrected and some of those debt pieces are coming due, and we're starting to see some of those assets trade or get recapitalized, but we have not seen them come public in a standalone IPO yet. I think within the lodging area, there may be 1 or 2 companies, and within the shopping center sector, 1 or 2 companies that have the size, quality of assets, and sponsorship to go public.
Okay, well, thank you very much for your time, Keith.
My pleasure.
And for more on this and other REIT news and analysis, check out REIT.com.